Welcome, ladies and gentlemen. Today is November 6th, Sunday. This is Brad Matheny. We're going to go over the TTScanner Hotlists. These are the hot lists from last week, updated and as of Friday. And as I had mentioned to you, the markets have been kind of in a sideways trend, near recent lows. I had indicated to you that these are weekly charts, and remember, these charts are going to as we're moving into this sideways basing potential pattern, you're going to get a number of triggers that show up one week and potentially get flat. That's because we're not in a real solid trend phase. We're in kind of a sideways rotation seeking out a bottom. We have a number of triggers that have flattened out. You can see here that we have XLU has gone flat. IHI has gone flat, ITB has gone flat, home construction, QQQ has gone flat, we have USRT has gone flat, and Exponential Technologies ETF has gone flat. We have triggers here from the past couple of weeks that are still holding up. We have RWX, which has been in a trade for 4 weeks. It's off by 2.42%. We have IYR, been in a trade for 4 weeks. It's up 0.01%. We have XLRE, been in a trade for 4 weeks, up 1.07. We have QTech, been in a trade for 5 weeks, up 7.11%. We have SOX, the semiconductor index, been in a trade for 5 weeks. It's up 0.54%. And then we have Nugget, been in a short trade for 17 weeks, up 25.06%. None of these have hit any targets. They've basically rolled around over the past couple of weeks because we've been in kind of a sideways trend up and down. These longer term trades have been in trades for 38 and 42 weeks. These have already hit targets. They're already seeing 40-48% profits. We are just near stop levels. Actually, no, we've got a ways to go. I was looking at the entry price over here. This is the entry price. This is where we're at right now, and this is our stop level over here. We could be holding these for quite a while. And then we have this trade, XLC. It's a new trade. This was from last week. It held up okay. XLC held up. It's up 6.6%, has not hit any targets. It's a short trade, and it's got moderate downward thrusting. Of course, look at the profit factor and the win rate. This was a very good trade compared to these profit factors and win rates. So notice here that most of what got flat are very low profit factor and win rates. This is a very high profit factor and win rate. That means that it has a very strong potential of showing some great opportunity. So on Monday, we'll get some new trades, potentially. We'll see what happens on Monday. But generally, of all the trades that got in and out, we are flat. These trades, we would want to get out of any of these positions. If you're still in XLC, you're holding it. And remember to use these win rates and profit factors. When I look at these types of trades, anything that's technically like a 1.9 and 4.0, 4.4 here, that's a pretty good number. Anything that's basically 90, 85, 90 over here in profit factor and say 1.4 or higher, we'll call it 1.2 or higher over here, generally has a pretty good chance of turning into a success. So this one had a pretty good chance here. This one, because 0.51, it had a lowered success rate. 0.63, 1.4, this would indicate the 0.63, a lower success rate. 0.56, again, lower success rate. So you want to try to watch for higher numbers, like 1.42, 4.5, or 97, 1.7, or 143, 3.5. These are going to potentially turn into great trades. With these lower ones, like these potentially, or anything like for example, this 0.37 or 1.0, this is something you would want to allocate a smaller amount of capital into your trade, because it just doesn't have that high-end success factoring that we're looking for. Okay, so now let's come over to the core inverse list. You can see that we had no new trades last week. We're still holding on to these trades. CHAD has been in a trade long for 2 weeks. It's already hit its first target. It is negative off of this rotation in the market. Look at the profit factor and win rate, 1.14, 2.43. This is a pretty good trade, folks. Yang has been long for 2 weeks. We're off 2.53%. It's hit both profit targets over the past couple of weeks. Boy, oh boy, this must have just shot up and rolled back downward. We are very close to our stop. It had a 0.92 and a 2.13 profit factor and win rate. This is probably more like 60-70% allocation just because these numbers are higher. Remember, I would be looking for something if it's below 0.79 and this is below, say, 1.2 or 1.25, then I'd be a bit more cautious. This trade here is TBX, has been in for 6 weeks, already hit one profit target, 5.25% profit, great profit factor and win rate. Same thing here with TMV, great profit factor and win rate. Been in a trade for 6 weeks, hit both profit targets, already 40% profit almost. And then this one here is 28 weeks long in EUM. And it's got good profit target and win rate. Hit both profit targets already and up 18%. So this one doesn't have any real any new trades to go over. We are going to look at the core list. We had a number of flat triggers here. These are from last week. You can see flat, flat, flat. Let me go over them with you. XHB, home builders, XLU, utility sector, innovation sector, ARKK, QLD, flat, XRT, retail, ETF, S&P, IYT, transportation flat, QQQ, the NASDAQ, Invesco, QQQ Trust, ARKQ, technology and robotics is flat, and Hale is flat, smart mobility. And even though these had some good profit factors, look over here, you can see them. Try not to highlight that area, but 2.58 and 5.33, these had some good win rates, but because of the rotation of the market, these things all flattened out. We had one trade that held up. DBB held up from last week. You can see here it's been in a trade. It's minus 0.49%, 0.82 and 1.55 profit factor and win rate. Hasn't hit any targets. This is again 0.82 and 1.55. That's borderline for holding, say, 70, 80, 90% normal allocation. You really want it to be a little bit higher, like this 1.42 and 3.0. That's where you would be a full percent, 100% allocation, or this 1.35, 3.17. Or this 1.1 and 1.9. These are great levels. 4.45 and 1.09. This would probably be more along the lines of a 50, 60% allocation, maybe a little lower because of that 0.45. And then this one, 0.79 and 2.0, that'd probably be about a 60, 65, 70% allocation. But anyway, so we've got a number of trades here. These are longer term. The newest trades are kind of waffling around. We got one here that's 11.6%, and then the rest of them are semi-flat. Let's go take a look at the value index. There we go. Value has got a lot of data in it. So got a couple of new triggers from last week that are holding up okay. Let me see what these are. Come across here, we are looking at Travelers, TRV is holding up at 0.63% profit, and Principal Financial Group, PFG, is a new trigger holding up at 3.91. Understand over here, you come over here and you see the win rate and profit factor, 0.56, 1.0, 0.85, and 1.86. This would be, Travelers would be about 50, 60% allocation. And the other one, the Principal Financial Group, because it is 0.86 and 1.85, this would be about 60, 70, maybe 75% allocation. And then we have these triggers up here, 3.0 at 0.3 and 0.71. This would be about 25, 35% allocation. It's a short trigger in Hasbro. It's up 10.3%, hasn't hit any targets yet. We have a short trigger here, 0.56 and 1.33. This would be about a 50 or 60% allocation in Eastman Chemical. It is short, it's 6 weeks old, minus 2.57. And then we have a 0.86 and a 2.14 here. 0.86 is close to 9 or 0.9, and the 2.14 profit factor or win rate over here gives me a little bit more confidence. So this would probably be about a 75, 85 allocation rate. And that is Intel Corp short, and we're up 25%. We've already hit our profit targets on that. So understand, this is teaching you how to allocate efficiently using the win rate profit factor. And of course, you can take a look at the thrust pattern. So here's a long trigger with 0.56, 1.0. As I mentioned to you, this is a little weaker here. So this would probably be about 40, 50, maybe 55% allocation. We have a good, strong thrusting pattern. It is a new trigger. We're up 0.63%. It is holding up okay. We haven't seen any moves to the upside yet, but still probably, 45, 50, 55% allocation because of that low profit factor. Here we have this next trade, a 0.86 and 1.86. This would probably be about 65, 75, maybe 80%. I'd have to be cautious with this. It is up 3.9% already. We haven't seen the profit targets get hit, but we still have moderately good thrusting. So this is a better setup, better profit factor, better win rate, better thrusting. So I could allocate a little bit more, maybe 70, 75, 80%. This one has got good thrusting, a lower profit factor, a moderate win rate. I'd probably be in the 40, 50, maybe 55% allocation on this. This one is a short. It's got decent thrusting, although purple, very poor profit factor, moderately poor win rate. This one would be probably only 30, 35% allocation. This one has got a positive thrusting pattern in red, a moderate profit factor, and a moderately strong win rate. And again, because of that, this is 6 weeks old. It could have actually been quite a bit stronger over the past 6 weeks, but because of that, this tells me that this is moderately weak. This positive number in thrusting indicates it's kind of moving against us. We want it to be negative red in thrusting, like this, negative 27, or, well, here's a negative 27 here that's purple. Purple is neutral bearish. It's still got a bit of a bearish trend, but not strongly bearish. Otherwise, it would be red. Light blue, or this kind of an aqua color, is moderately bullish. Bullish is here in the green. Solid green indicates we've got definite upward thrusting. Solid red means we have definite downward thrusting. So the numbers pay attention, and the colors are important as well. So a positive thrusting number in red means that it is still downward trending, but we are getting a shorter term upward rotation in the market, which is going to take away from our success rate. A green, which we don't have with a negative number, would indicate that we are still in bullish trending, but we have downward short-term thrusting. A positive purple, like this 13.68, means that we are moderately bearish. No, we're not strongly bearish. We're moderately bearish, and we have upward thrusting. A positive 2.9, like right here, means we are moderately bearish with short-term upward thrusting. So understand, this is how you read these and how you pay attention to them. We're likely going to see these two new triggers hold up. If the markets hold up, these are long trades in value with Travelers and Principal Financial Group. We likely see these hold up in this thrusting pattern. They're still positive. We'll see how they play out over the next couple of weeks, and we'll look for any new triggers on Monday. Remember, the market's been very, very volatile and very flat. So I'm trying to teach you how to allocate capital efficiently, taking some of these trades, and I want you to be aware that there is absolutely nothing wrong with taking small positions in some of these trades right now and seeing how they hold up if they make it through the next 2 or 3 weeks before you decide to commit anything further to them. That's kind of how the markets work in this sideways rotation right now. You will get triggers. You will get opportunities. You need to allocate your capital based on the degree of risk, how much you're willing to risk on some of these trades. And you need to understand we are in a sideways trending market. The rotational modeling system is bullish weekly, bearish daily. We are in a sideways rotational kind of a downward trending market, looking potentially for a bottom. But we don't have it yet. We don't know what is coming. Once we get more into confirmed bullish trending or bearish trending, then these triggers will have a little bit more weight to them because we'll be in a more confirmed trend. But right now, we're kind of not there. We're in a wishy-washy, wait-and-see type of scenario. These opportunities are still here because you can get, like this one, 13 weeks, 27%, or this one, 3 weeks, and already got 10% in a move. These are still decent triggers. Here's one that's less than 5 days old. It's got 4% profit in the trade already. But you have to be cautious in how you're allocating your capital. You do not want to go load up on any one of these things thinking you're going to, hit a home run. Nowadays, the markets are just kind of waffling around with a lot of volatility, looking for that next big trend. And my analysis says we should be moving into a reversion trade to the upside, but we're still in a downward trending cycle right now. We haven't seen enough confirmation to the upside to actually call that reversion trade. I just think it's setting up as a Christmas rally. I think the world is moving away from this unwinding, and there are still risks in real estate, in automotive companies. Now, granted, AutoZone and things of this nature, they're going to do well because people are trying to maintain their vehicles. But I'm telling you that, car dealers, Carvana and the others, I mean, it's just a really ugly environment out there because car loans have shot up to what, 10, 11%. And a lot of people just simply can't afford a $600 a month car payment anymore. So that's the way it goes in the world. Hold on, guys. We're going to make it through this. Remember, the big opportunity is coming over the next 5 to 7 years. So follow along. Remember, we are, I'm going to try to get over here, here, and here. Remember, we are bearish daily on the S&P, bullish weekly on the S&P. You should only be trading with 10% of your total portfolio into stocks. The rest of it should be in cash and or hedged in metals. So when you're trading these TTScanner setups, remember, you should be trading a very small portion, 1% or 0.5% or maybe 1.5% of your total capital. So if you see a 10% win over on the TTScanner charts over here, remember, these 10% wins are not really 10%. They're 10% on 1% of your total capital, which means this ends up being, if I do the math right, 0.1% win on your portfolio. So it's a very big picture scenario. You want to be 90% in cash, 10% in stocks, potentially 25% in metals as a hedge. This is a real strong hedge against a crisis event, broader war, economic collapse, and understand that metals, I just did a video on it, posting it up right now. Metals have been very wonky over the past 2 years after COVID, but they're settling into a very solid base right now. And I believe we're going to see what I've been telling you for years now is the next big phase in metals. So what you want to do is try to protect yourself, stay in cash, stay away from risk. You can still trade, but understand you're only trading with a small percentage of your capital. And that means that these winners or losers are going to end up being 0.05% or 0.07% or maybe 0.15%. And they're not going to be huge. And that's the whole purpose of what I'm doing for you is you follow this as a primary guide to how you want to address your total trading plan. Then you can come back into the TTScanner Hotlists and the live trades and figure out where the opportunities are in the market. The TTScanner Hotlist is a weekly algorithmic system which is designed to catch bigger trends. Like I said, 40, 50, 80 weeks. These are 2 years, almost a year or 2 years in length. But right now, we're just not getting those triggers. And that's because the way the market is, it's not a big opportunity. We need to stay very cautious, which is why I keep going back to this, saying we need to be aware of the big picture plan, which is you should be safely hedging in cash and metals and trading only a very small portion of your portfolio into stocks. You can still trade, but understand that we just don't have the opportunity in the trends right now. All right, guys, that's it. I'm going to try to get these videos and the rest of the update up for you.